Good morning and welcome to Market Day Report. I'm Chris Swift and we are glad you are here with us this morning. I'm anxious to see how the grain market's traded overnight, so let's take a look starting off with the corn. I know it was a little bit firmer when I left the house and up 3/4 on the March contract at 470.5. The May contract up a penny, 483.5, and the July contract up a penny at 493.5. Just stepping up a dime each time. And in the soybean market, down just soft a little bit, down 3 cents on the Jan at 13.05 1/4. March down 3, 13.12 3/4. Not to be outdone, May down 3 at 13.23 3/4. Chicago wheat this morning, it was a kind of a bad day yesterday, up a little bit this morning. March up 4.5 at 614.5. May up 4 1/4 at 625.5. New crop July up 4 1/4 at 632 1/4. Kansas City hard red winter wheat up 4 1/4 on the March at 629 1/4. 23 3/4 low, 632 3/4 high. May up 3 1/4 at 633. New crop July 637 1/4 up 2 3/4. And we'll wrap it up with Minneapolis spring wheat. And a little bit mixed, but I wouldn't pay a lot of attention to those back months. They may not have traded. March up 4 3/4 at 722 3/4. The May up 4 3/4 at 732. The last trade on July down 8.5, 735.5. Again, I wouldn't pay a whole lot of attention to that one. Got my guest this morning is Brian Hoops from Midwest Market Solution. Brian, good morning to you. I hope everything is getting ready for the holiday seasons for you.
Hey, good morning, Chris. Well, same to you. We're getting very close, and I'm sure a lot of your listeners know that there is no markets Sunday night because of Christmas Eve or all day Monday or Monday evening, and it'll be a very hard open on Tuesday of next week because of the Christmas holiday, and it's the same pattern for the following week because of New Year's Day. So we get back-to-back weeks here. This is the last full trading week of the year, and then you get into the holiday shortened weeks next couple weeks, and that affects, a lot of our export commitments, a lot of our shipping, as well as our slaughter pace when we talk about livestock for both beef and pork.
Absolutely. I know that time frame, a lot of traders go through withdrawal through that, not being able to trade for that long of a period of time. I'm pretty sure we're going to get some news out this week, too. On Friday, we get the hogs and pigs report, cattle on feed report, cold storage report, so there won't be anything shy to look forward to when we open back up on Tuesday. The grain markets, anything you see there that just really stands out this morning to you?
Well, there's a couple of things. We had exports out this morning. They were really good for soybeans. They came in around 73 million bushels, and unknown destination in China, both big buyers, 28.9 million bushels for unknown category, China 25.7. So over 53 million of the 73 million was allocated to what looks to be probably end up being China. Mexico, once again, the biggest buyer of U.S. corn, 13.6 of the 39 that were sold. Wheat sales remain pretty slow, pretty dismal. So, those numbers aren't outstanding on it in itself, but the soybean number was. And, we look at the action of the soybeans and the corn this week. Corn's making contract lows. Soybeans testing support earlier this week, closing below it. In the overnight, we're testing next level support. A close below it probably pushes you back into the October lows, which is, another at least 20, 25 cents more to the downside than where we're currently trading. So the price action hasn't been real great on the futures market. But one thing I've noticed in the spreads is, March to July soybeans at one time was a 46-cent carry. Now it's maybe closer to 20. So the market is trying to price some crop loose from the farmer's hands here, at least soybeans anyway, in the near term, trying to do that with adjustments in the spreads, basis narrowing as well. And if it can't do that, the next thing to do is to have a rally in the futures market, and that may come if we continue to see some crop losses in South America. But right now, markets are factoring in improving weather conditions, and that's what's pushing our prices actually lower.
I did see some of the Weather Channel and showed where they were getting some of that rain down there, and I know that it is forecasted for the next couple of days. Real quick, you mentioned our corn exports to Mexico, and we know we've got some issues with rail now. Is that maybe what gives corn a little bit of its weakness right now?
I think it's one of the things, yeah, absolutely. Unless that rail strike is diverted here relatively soon, it's going to slow down our exports even further. We have logistics problems shipping down the Mississippi River due to low river levels. Our number one buyer far and away this year has been Mexico of U.S. corn. And so if we're not able to ship it on rail, it'll slow our exports down considerably. That corn market is, I think, just kind of destined to languish through these winter months, trying to find a price level that'll stimulate some demand. 39.9 million bushels of corn is not a great number to chew through 2.1, 2.2 billion bushels of corn carryout. We need better exports than that. And I think that market is trying to push lower in an attempt to find that level that'll stimulate better demand.
All right, Brian, we certainly do appreciate that. Stay with us. We're going to take a real quick commercial break. We're talking with Brian Hoops. We'll be right back. Welcome back to Market Day Report. We closed the livestock markets yesterday up pretty good. I'm anxious to see how they're going to open this morning. But let's see where we're going to start at this morning. From yesterday's close, December up 157 at 170.02. It was right up on the high of the day at 170.20. The Feb contract up $1.52 at 170.30. And all the way out to the June contract up 45 at 171.30. I know the feeders had put on some premium as well, up 215 on the January at 224.05. March up 255 at 225.75. April up 265 at 230.52. And I'm almost positive that feeder cattle index poked its head back up above 220 yesterday. The hog market was a little bit soft, but not terribly. It's in expectations of Friday's Hogs and Pigs report. Got February down 32 at 70.22. April down 67 at 76.92. June down 45 at 92.25. I'd like to invite Brian Hoops back in for me for just a minute and talk about the livestock markets. And again, we got a plethora of information coming out on Friday. Does any of that concern you, or are you excited about seeing some of those numbers?
Well, I'm excited to see all these numbers. The cattle and feed number looks to be positive, and I think the market's anticipating that and really starting to put its low in and rally from here, anticipating that, placement number is going to be down significantly in this report. Next month's report probably be down once again, and that's going to give us higher prices. We certainly don't need to be trading at these price levels that we're currently at. Now the cash markets, if they can rebound, and if we can see some packer margins be replenished, with the cutouts maybe improving over the next couple of weeks, we'll see better cash markets. Export sales for the beef, not really good this morning at all. They're only around maybe 15, 16 million tons when you combine the marking years. It's an okay number, but nothing like the pork. It was just an outstanding number this morning. That came in marking year high for shipments, over 40 million tons. This year's sales 37.5, next year 25.5. So you had some really strong numbers out of pork, and that should help us recover here this morning, at least initially. Of course, you have the hog pig report tomorrow, cold storage, and that could temper the enthusiasm for how much buying is seen off of this export sales number. But I think that's the export number going to catch some of these hog traders by surprise and trying to push this market to the downside. Yeah,
and I tell you, we got at least a little bit of time for everybody to go through those numbers this time instead of having to come right in on Monday morning and trade right into them. So, Brian, I certainly do appreciate you taking the time to be with us this morning. As Brian Hoops, he is with Midwest Market Solutions. And Suzanne, I'm anxious to hear what the opening bell is going to sound like this morning.
It's going to be interesting. I mean, listen, this is par for the course. You, of course, with your own trading company here in Franklin, just outside of Nashville. This is a slow time, right?
Oh, it is.
Everybody kind of just checks out.
We are, but the markets still move, and it's very important because we do planning. We must do a lot of planning for what's coming.
And anticipation.
And next year is going to be just as wild in price fluctuation as this year was. So there's going to be a lot of opportunities for everybody.
Looking forward to seeing how it opens. Right. Thank you so much, Chris.